Let's take a look at the global market highlights and news for Friday, February 21st, 2014. Walmart downgrades forecast. Facebook deals with the market talks, and weak Chinese manufacturing data continues to weigh heavy. Let's take a quick look at what's happening in the global markets now. Wall Street closed higher on Thursday, with the Dow putting on nearly 100 points and the S&P 500 closing in on a record high as investors seem to shrug off a mixed bag of economic and earnings reports. On the economic front, jobless claims declined less than expected in the latest week, while consumer prices ticked up 0.1% in January, matching expectations. Meanwhile, data from the Philadelphia Federal Reserve showed manufacturing activity in the Mid-Atlantic region unexpectedly contracted in February as new orders plunged. The market was buzzing with chatter about Facebook, which announced plans Wednesday to buy messaging platform WhatsApp for $19 billion in cash and stocks. The deal also means Facebook doesn't have to worry about a rival social media company scooping up WhatsApp and its millions of dedicated users. Walmart reported quarterly results that topped expectations, but shares of the retail chain after it warned that economic factors would weigh on sales this year. Walmart stores offered a weaker than expected forecast for its recently started fiscal year and current quarter, further evidence of its struggles following the holiday shopping season. The world's biggest retailer warned a variety of economic factors will continue to weigh on its outlook, including reductions in government benefits, higher taxes, and tighter credit. Europe's main stock exchange wavered following a slump for share prices across Asia after poorly received Chinese data and on the outlook for the United States stimulus. Japanese stocks bounced up today following a higher finish for U.S. stocks and comments from Japan's central bank about its stimulus efforts. In the foreign exchange market, Asian currencies headed for the worst weekly loss in 6 months as signs of a deeper economic slowdown in China and the Federal Reserve's support for tapering asset purchases weighed on emerging markets. On the U.S. front, several Fed officials backed a continued decrease in bond purchases unless there is an unappreciable change in the U.S. economic outlook. The dollar rose versus most of its major counterparts this week on bets the Federal Reserve will press on with reducing stimulus even amid weaker U.S. economic data that may have been caused by winter storms. The dollar added 0.2% to 102.51 yen, extending its gain this week to 0.7%, the biggest since the 5 days through December 27th. The dollar was little changed at 1.3719 against the euro. Europe's shared currency advanced 0.2% to 140.63 yen and has risen 0.9% since February 14th. Moving to the commodities market, U.S. crude oil headed for a 6th weekly gain as cold weather in the U.S. bolstered demand for heating fuels in the world's biggest oil consumer. Brent in London is poised to advance for the week. WTI was at 102.74 a barrel. Gold futures fell for the second straight day as concern that the Federal Reserve will press on with cuts in U.S. monetary stimulus dampened demand for the metal as an alternative asset. Gold fell 0.3% to settle at $1316.90 an ounce. This is Amy Anderson from Option Rally signing off. Follow me on Facebook and watch for our new financial terms of the day and our weekly event news. And of course, I'm waiting for your like below if you like today's Market Watch. Have a great weekend.